How the Fed rate hikes impact you. The Federal Reserve increased short-term interest rates by 0.75% on November 2. This means the Fed funds rate is currently 4%. The prime rate is based on the Fed funds rate. The prime rate is set by large banks and is often used to determine the interest rates on lines of credit, credit cards, and business loans. The formula for prime is Fed funds rate plus 3. This means the prime rate is currently 7%. There are 4 ways which could impact you. 1. Mortgage rates. Mortgage rates on fixed-rate mortgages are not impacted by changes to the federal funds rate. Mortgage rates fluctuate based on the supply and demand for mortgage bonds in the bond market. The Fed has been the biggest buyer of mortgage bonds in recent years, which caused mortgage rates to go down to record levels. The Fed is currently in the process of exiting its bond buying programs. That's why the average interest rates on fixed-rate mortgages went up by more than 3% so far this year, according to Freddie Mac's weekly survey of mortgage rates. Expect mortgage rates to continue drifting higher as the Fed continues to exit its pandemic-era bond buying programs. 2. Home equity lines of credit. Interest rates on this changes whenever the Fed changes rates. That's because these are based on the prime rate, which went up to 7%. These are typically quoted at prime plus a certain percentage. For example, if your home equity lines of credit is prime plus 1, your home equity lines of credit interest rate would be 8%. 3. Credit cards. Interest rates on credit cards change whenever the Fed changes rates. That's because credit cards are based on the prime rate. Credit cards are typically quoted at prime plus a certain percentage. For example, if your credit card is prime plus 10, your credit card interest rate would be 17%. 4. Business loans and lines of credit. Interest rates on them change whenever the Fed changes rates. That's because they are often based on the prime rate, which went up to 7%. It's typically quoted at prime plus a certain percentage. For example, if your business line of credit is prime plus 3, your interest rate would be 10%. As per us at Keithco Lending Team, home equity lines of credit, credit cards, and business loans and lines of credit. They all are likely to continue moving higher as the Fed continues to hike interest rates.